What's going on, you guys? Welcome back to another video by Real FX. In this video we are going to be answering a question that we got from our subscriber, and the question is there a difference between trading on a higher time frame and trading on a lower time frame? So if you're interested in finding out the answer to that question, stick around till the end of the video. And if you do find the video interesting at the end of the video, don't forget to like and subscribe to the channel if you haven't subscribed. Now, before we continue, guys, I want to give you some good news. Since RealFX has been getting many requests about mentorship services, we have decided to create mentorship programs. So for now, this is what we offer at RealFX. We offer two kinds of mentorship programs. We offer the gold mentorship, which comes with the market breaker beginner strategy, and in this package you'll get a step-by-step guide throughout the mentorship. You'll get a weekly market breakdown, and on the platinum mentorship you will get the Real FX dynamite strategy, which will be taught in a very simple step-by-step guide. It also features a weekly market breakdown and a trading plan that anyone can follow. And in all these packages you get a trading psychology lessons, and our mentors will always be ready to answer your questions. And all these mentorship packages are valid in a period of 3 months. So this is it, guys. Join the mentorship and in 3 months you'll be the trading beast that you want to be. Now if you're interested in the mentorship, I will leave a link in description and you can click on it and it will take you to our admin and she will take it from there. Okay guys, now before we answer this question, I want us to look at this example here. It's on the Euro Swiss francs and it's on the 1 minute time frame. So we're going to look at this example over here, and then we are going to look at another example which is going to be on a higher time frame, like the daily time frame or the 4-hour time frame, and then we can draw a conclusion at the end of the video. And I'm going to give you my thoughts when it comes to trading the lower time frame and the higher time frame. Now as you can see here, we've been pushing to the upside. The market has been giving us a push to the upside. You can see the momentum is towards to the upside because we are making higher highs and higher lows. And as you can see here, we had this bit of correction here, and after that we had this impulsive move to the upside, and then the market came down, and then this correction here became our demand area. So the market came back and it reacted on this level over here. Okay, so let's look at how we were going to trade this setup over here. As you can see, if you're well trained, you should know how to spot liquidity in the market. So it's either you are able to spot liquidity or you become part of the liquidity. So this is the liquidity here. We have a tap into our demand. So for those who are trading aggressively, this is where we would be taking our buys. We buy from here all the way to the top. You know, the recent high is always the target if we are buying, and the recent low is always the target if we are selling. Okay, so this is how we do it at Real FX. So this is just the free information that we are giving away, guys, at Real FX. If you want to know more, you know what you have to do. You just have to join our mentorship programs. As you can see now, this is liquidity. So what happens after liquidity? We tap into our demand area, and then the market starts pushing to the upside. And then we have here what we call a demand, a supply being switched into being a demand. Okay, so I'm not gonna talk a lot about that, but as you can see, after here what the market did was it retraced around this area, pushed to the downside, and then it started pushing to the upside. So if you are one of our students, you know that here you could have had another entry. So let's say you bought from this level over here, and then this would be your target over here. This is if you were to enter aggressively, but if you wanted a confirmation, this here would have been your confirmation. So you were going to enter somewhere around here. This was going to be your confirmation. When the market retraced here, you're going to be buying from this level. So you could have had this as your first entry and this one as your second entry, and yeah, so, and then this was going to be your second entry. The target is still the same, and as the market continues, you can also have another entry over here. You were gonna also have another entry over here, and then the market did go to hit our take profit, and then it continued like that, and we're going to start looking for another buying opportunity if we get the buying opportunity, or if the market breaks out, if the market takes out this level over here, we were gonna start to look for selling opportunities. So if the market comes and then takes out this low over here, we know that okay, now the market has changed its narrative. So as you can see here, the market took out that low over there, so now we know that okay, everything has changed and the market has to retrace to the upside and then start shooting to the downside. So this is the example that I wanted us to look on the 1 minute time frame. Now we're going to look at another example on a higher time frame. Okay guys, now let's continue with the video. Let's look at an example on a higher time frame. This is the daily time frame. It's the euro Swiss francs pair. Now as you can see here, the market was in a downward trend, and this is the latest breakout of structure to the downside. This is the latest breakout of structure to the downside, and you know what happens after a breakout of structure to the downside? We expect a retracement, and I think we have fully retraced. Now the market is pushing to the downside. Where did the market come to? The market came back into this zone over here, even though it didn't fully tap into the zone, but it came back into that zone over there. And then after that, we saw this change of character here. So this was our confirmation. This change of character here was our confirmation, and then the market retraced to the upside, and then it reacted on this breaker block that we have over here, and then now it's pushing to the downside. So this is where our entry would be. This is our take profit here. Our take profit here is this recent low here. Remember, when we are selling, our take profit is the recent low. Okay, so this is how we would trade at real FX. This is how we would trade. Now after this analysis on the two different time frames, what we can see is that the market is not different from the from the minor time frame. So the smaller time frame and the bigger time frame, the difference is not that much. Whatever works on the smaller time frame can still work on a higher time frame. So the only thing that is going to be different is the amount of pips that you are going to be winning, or the amount of pips that you are going to be losing. But in terms of strategies working different, all strategies work on all different time frames. So the only thing that you would have as a difference here is the amount of pips that you're going to win. But if you are someone who trades based on risk reward ratios, then that is not going to be a problem for you, because if you are trading on the 1 minute time frame, if a trade is 1:5, it might take like 30 minutes for the trade to hit your stop loss or your take profit. But if you were risking $100 for the trade, you were gonna get $500. So the same thing applies on a higher time frame. If your risk reward ratio is 1:5, if you are risking $100, you are going to lose $100. If you win, you are going to make $500. So pips, if you're a person who trades risk reward ratios, pips are not going to be having a huge impact on your trading. So that's my opinion, guys. I don't believe that trading strategies differ from time frame to time frame. I feel like all time frames are the same, whether you're trading on a smaller time frame or maybe you're trading on a higher time frame. All the strategies work on all the time frames. If you are trading trend lines work on all time frames. If you are trading smart money concepts work on all time frames. So that's the end of the video, guys. I hope you enjoyed the video and stay tuned for our next video.